Hello, everybody. This is Troy. I'm a senior account manager with AvaTrade. I'll be leading the webinar today. Welcome. And as we get going, I just want to do a quick systems check, make sure everyone's hearing me all right and seeing the screen. Just type OK in the chat box if everything's running properly for you. All right, great. I've got enough responses. If anyone has any issues as we go through the webinar, feel free to type in the chat box. All right, so a lot going on. Apple had some numbers that came out between yesterday and today, and we'll take a look at how that's affecting the technicals on a lot of assets on the chart. Being that they're such a big company, they had a big effect on what's happening today fundamentally. And so that'll play a role into maybe what you prefer to do with your technical analysis as we look at the charts and the movements that are going on. Now, as we get going, as always, keep in mind, all investments have risk. No one trade is guaranteed to win, but also just as obvious, each trade does have the potential for nice profits, which is why we're all here. And if you manage things accordingly on the risk side and you apply proper strategy, there's no reason why you can't profit long-term with your trading. And as we go through, make sure you understand that what we cover is not meant to be financial advisement. It's coming from an educational perspective to hopefully add to your knowledge base, to add some tools to your tool belt, so to speak, so that you're able to move forward, hopefully, with a better profit margin and at the same time, maybe improve the win percentage a bit as well. But really what's more important is the profit margin. And there's some different strategies where you don't necessarily have to have a high win percentage to make nice profits. And that depends on how you set things up. And we'll go over some ideas in that regard as well. Hello, John. Welcome. All right, so you can read our full risk disclosure statement on avatrade.com if you'd like. As long as we're talking about risk, those of you that are new to things, we do have a nice feature. It's a unique feature to AvaTrade and specifically to the AvaGo app that helps you manage risk with a feature called AvaProtect. And we could just jump to that real quick. I'll show you on our website. If you go to trading info and then click on AvaProtect, okay, there's a whole page. First, you can download the app, the AvaGo app. Okay, AvaProtect is not the app, it's a function on the app. You can download the app from Google Play or the Apple App Store using these links, or you can keyword search AvaTrade Go and you'll find it. With this app, there's a feature called AvaProtect, and it's explained here, and there's also a nice video that you can watch that walks you through all the features and functionality of AvaProtect and how it can help pay you back for your losses during protected time periods. And right now, it's pretty much all the FX, gold, silver. It's not available on all assets, but on a good number of assets. And it's pretty unique. And it looks like this here. You see it says AvaProtect. As you're in the order window setting up your trade, you can pick the length of time from the options given, and it'll give you the exact cost for that coverage. Some of the assets have like 1 hour, 4 hours, 6 hours, 1 day, 2 days, 3 days, etc. There are different offerings on different assets, but it does vary. Indri, all of my webinars are recorded, and by later today, within a few hours, and certainly by tomorrow, it's uploaded to our YouTube channel. So if you go to YouTube, search AvaTrade channel, you'll find it. And then there's a section on AvaTrade's channel on YouTube for English webinars, and they're all uploaded there, organized by date. You'll find yesterday's and the prior webinars from this week, last week, etc. Okay, good questions. All right, so let's then take a look at what's happening in the markets before we jump on my demo account to look at the live movements. Let's take a look at an overview of what's happening. First of all, the first site you should see is right here. Do you see positive momentum today or negative based on this snapshot right here positive momentum or negative? Yeah, positive. It's within 5 seconds. You can know, maybe if I'm trading gold, I prefer to wait till it comes to a high point with my technical analysis, find an optimum entry point to trade down on gold, right? If there's so much positive momentum on the market, everything's green. Everything. What's the only thing that's red here? What is that, VIX? What is that? Why would everything be green but the VIX index is red? VIX is the volatility index. Good. Otherwise known sometimes as the fear index. And if volatility and fear are in the red, that means fear is dropping. And so safe haven assets are probably more bearish right now, okay? Based on the fact that fear, the fear index, is going down. So probably safe haven assets like the yen, gold, etc., have some bearish pressure on them, right? It doesn't mean they're guaranteed to drop, but we'll take a look at the charts, we'll look at the technicals, and you might have an idea based on this quick snapshot right here, what your preferred direction might be. Okay, now we can look at the headline. This is from 53 minutes ago. Stocks, Europe posts gains, earnings and economic data impress. Sounds like more positive headwinds, right? Positive momentum for the markets. We'll look at the earnings that they're talking about. One of them is Apple. And by the way, on investing.com, if you want to go to earnings, let me back up and walk you through the steps. So investing.com, and there are lots of, you can go to nasdaq.com, there are lots of sources for earnings reports. You see at the top, earnings calendar. Okay, great. You click the filter, you look for the company you're interested in, Apple. And by the way, we looked at this last week. Boy, if you followed what we were looking at and what we talked about, the potential leading up to the announcement, there could have been some huge profits. There were huge movements, huge volatility. As you get close to anyone's earnings release date, the week or two leading up to it, you've got lots of movement, and obviously right after too. Okay, so here's the latest numbers that came in. We looked last week and we were saying, okay, the expectations were huge. From 2.83 earnings per share, the expectation for yesterday's numbers were almost double, 4.54 earnings per share. The expectation in the forecast was a huge increase in earnings per share, and the forecast was a huge increase in revenue. Guess what? They beat the numbers for both. Not only was the expectation huge, but it exceeded that expectation by a significant number. It was almost 5 on the earnings per share and over 91 billion in revenue, compared to an expectation of 88, which was already a huge increase in expectation from the prior quarter at 63. Okay, so nearly a 33%, a third increase in revenue from one quarter to the next. That's huge, huge, huge. It's the new iPhone. It was within the cycle. People tend to buy new phones every 3 to 5 years. Apple anticipated that they probably had huge numbers on the iPhone sale the end of last year, which is what these numbers are, the last quarter. So this created momentum on all the market because Apple's such a huge player, and the implications are maybe some other companies are doing well also. Okay, and so this is part of what's happening when we looked at the article that said earnings and economic data impress. Okay, this is where we're at with the fundamentals. And then we can look at some other things. If we look at the economic calendar, and again, this is available in lots of places, but at the top, I clicked on economic calendar instead of earnings calendar, and we look at economic announcements. Okay, just a quick overview. Good numbers for the pound. Okay, 2 reports for the Great Britain pound, and out of Great Britain, I should say, and both were better than expected. Both were medium impact type announcements, 2 bullheads out of 3. So maybe positive momentum with the pound. If you think the pound specifically, because of these announcements, should have positive momentum, what currency would make sense to pair it against, since safe havens are probably more bearish today? What might you pair the pound against? What's the safe haven currency that probably should weaken with good news? The yen, right? Martin, you're saying the euro because look, the euro had some bad numbers too. So I understand, Martin, what you're saying. I was referencing the safe haven bearish pressure today with all the positive momentum on the market. So the yen has reason to maybe be weaker today. Okay, and look what came out of Japan. You see, Japan had an announcement early morning, and it was negative. So there's another reason why the yen might be a little bit weak. It wasn't a high level announcement, only one bullhead, but it is bad news there for the yen on this report, worse than expected. And with the positive momentum on the market, another reason for the yen maybe to be bearish. Okay, so now it's about catching entry points. If you know you prefer to trade against the yen with assets that you think should be strengthening, like maybe the pound with this good news, now we get into the technical analysis on the chart here in a moment to look at where would I want to enter? Where are the breakthrough points that might occur on a resistance level, or where's the support level it might be bouncing up from? And those are the things we'll look at in a moment. The euro really was mixed today. Okay, I don't know that I would look to pair the pound against the euro just based on this, because yeah, we had two bad announcements on the euro and then two good announcements involving the European Union, and then a bad announcement and then two good ones involving the European Union. So it's a mixed bag there for the euro, which when I see a mixed bag and I feel it's 50-50, maybe I don't want to trade on that. I like to have more certainty on something I might trade on. Unless you like, if you're scalping and you're trading on ranging with this sort of mixed news, maybe it's not breaking resistance or support and just bouncing up and down. You could trade in a ranging fashion when you see mixed news. It's more likely not to break one way or the other. Okay, so that's pretty much it on this area right now in terms of the fundamentals. And this is out of the US. One more article. There's a Fed meeting tonight, the FOMC meeting out of the US, where they decide monetary policy. This article says they don't expect the US to lower interest rates today. And so if they did unexpectedly, that typically tends to weaken a currency. You'd see the USD weaken. They're saying they don't expect the interest rate to be lowered. So probably it won't be. They're usually right on these expectations. Typically, they're not surprised by if it's lowered or raised. Now, what probably is more important to listen to is what they say. When they have these FOMC statements, if they come out and talk bullish and say, wow, we really don't anticipate lowering interest rates at all this year, you'd see the USD strengthen like crazy, right? Or if they come out and say, yeah, we're not lowering interest rates now, but we anticipate we may need to a couple times this year still, then you might see the USD weaken. So what they say, not what they do, a lot of times can preemptively cause a currency to weaken or strengthen. So my point is, we don't know for sure what they're going to say, right? We can speculate about it, but the point is there will be volatility with USD pairings. There's a high likelihood of volatility with USD pairings, so your technical analysis plan should take that into account, that you very well with buy stop and sell stop orders could have big breakthroughs on either a support level or a resistance level, and have those pending orders ready for that to occur. Okay, not just right before they speak, but even as a longer range plan as well. Okay, all right, so those are things to keep in mind. And part of this is they're talking about the quantitative easing that the US has been doing. They might cut back on the Fed's buying of bonds, which has been helping the banks out. And if they announce that they're going to cut back on that supportive mechanism, you may see the markets pull back a bit, because that helps the stock market and these indices climb, all this quantitative easing stuff where they're helping the banks have more money on hand to loan to businesses cheap. So point is, we don't know for sure what they'll say, but could be big movements as these talks come in, and that's later today. Okay, that's on into the evening when that will be occurring. Okay, so with all of that understood, let's then go to the charts and do our technical analysis, which is the name of the webinar. I know we did a lot of fundamental analysis there, but it's important before you do your technical analysis, and that didn't take that long. What, 10 minutes? Okay, to do a quick overview to understand what direction the market might have pressure to move. Not that it has to keep moving that direction, but at least you have that knowledge. And now as you do your technical analysis, you might have preference in terms of what direction you prefer to find entry points to trade. Okay, and it can eliminate false signals, even if it eliminates 5% of your bad trades. That's a huge difference on P&L. Okay, it's about raising the win percentage just enough to go from, if you're breaking even up and down, to making a consistent profit each month or each week. Okay, all right, so this was from yesterday's cryptocurrency webinar, and we talked about the fact that Bitcoin was following the safe havens quite a bit, and other cryptocurrencies as well were following the safe havens because they're decentralized. Cryptocurrencies are decentralized, like gold, like the safe haven, typical safe haven asset, gold. And so many times cryptocurrencies have been mimicking gold as people run from different economies. Well, cryptocurrencies aren't tied to any one economy, so they've been mimicking it quite a bit. So we were talking about the potential for movement yesterday on cryptocurrencies, and you know, we could see the resistance level, right? Resistance, there's support down here. You see the lines that we drew, and we were saying you could have a buy stop below the support in case it drops, and you could have, I'm sorry, a sell stop below the support in case it drops, a pending order. And we drew these lines and said you could have a buy stop in case it breaks the resistance and breaks through. Well, guess what? I think it did the opposite of what the fundamental news was tending us to think. But our whole point was, don't try and guess. Don't trade to be right. Trade to be smart. So the idea was set up pending orders maybe in both directions. Buy stop on the top of the resistance, sell stop on the bottom. And in case it breaks the opposite way, hey, you're in. And that's exactly what happened. It broke up as gold maybe was starting to pull back. This broke up still. And look what happened. Okay. The climb went, if you'd have gotten in right here above the resistance where we drew these lines yesterday, had you followed the webinar and set up that pending order, obviously there was no guarantee this was going to happen, but many, many times this happens. 91.76 would have been your entry. It never looked back, so you wouldn't have got caught up in a stop loss and then it went up. It had a typical breakthrough candle. And if you waited till it consolidated and got out anytime here, as it went sideways, that's 93.35 or so. We're talking about $280. I'm sorry, 200, just under 200, 180 something dollars rise per coin. A one lot position would have paid you almost $2,000 on that. In 15 minutes, it made that climb on a simple buy stop based on technical analysis, resistance point, support point, breakthrough. Wow. So, and I'm not saying you had to trade one full lot. You can trade any trade size you want. But the point is, that's a huge potential profit with a simple technical analysis strategy. Okay. Volatility is good. There was volatility because of the coronavirus fears. Everything was bouncing around. And if we matched it up, it's possible gold also spiked up at that time. Okay. But it doesn't have to be the case all the time. And the point here is, regardless of the fundamentals, look at the technical strategy worked very, very well. Okay. Now let's go and take a look at some assets maybe that make sense today. Let's look at the pound. Okay, so we already see the pound has spiked up some with the announcements earlier, right? It came up, it hit a resistance level, and now it's pulled back down. Okay, so there's a support level down here. Support, 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 up. Comes back down, support, it hits, back up. Okay, this was the rise with the positive announcements. Hit a major resistance level, and what happens? Right back down. So now we're near the support level. The fundamental news told us what about the pound yen situation? What direction might you be thinking? Remember, let me show you. Here we are. Announcements on the pound earlier today, positive. Okay, the euro had negatives, but positive on the pound. And if we look here, positive momentum from the Apple numbers that came in between yesterday and today, and lots of positive momentum with the fear index dropping. Okay, so as we go back and look at that, some of you are already typing up. You think pound should probably go up against the yen. The yen has reason to weaken as the markets look all green today and happy. And the pound has reason to strengthen with those positive numbers that came in. We see that it did bounce nicely and surge up already with that positive news. And now it's pulled back down off the resistance. So this might be what technical analysis traders refer to as an opportunistic entry point, meaning it's near the support, a support that's already been tested and held. And if you believe the support level will hold, it's pretty close to the support, you could take a shot at a buy on the pound. Where might you put your stop loss in this situation? And I'm not saying you have to buy in the pound. We're just looking at the news. We're looking at the technicals and saying, hey, this could make sense. Where might you put your stop loss if you're using a stop loss? Not everyone does. John, you're saying below the support? Yeah, exactly. Technical traders tend to say, the reason I'm buying is because I don't think it'll break the support. If it breaks the support, then guess what? I was wrong. And maybe I cut my losses at some point below that support level. Okay. You also could have a pending sell stop. If let's say you did a market buy now, you could have a pending sell stop at the same spot. You bail out on the buy if you're accepting the fact that, okay, I was wrong. For the same reason, you might say, well, it broke the support, then let's sell. And you'd have a sell stop pending order down here potentially. Okay, because there's two types of fundamental news, isn't there? Okay, one type is like what we looked at, the announcements, the earnings reports, positive momentum. The other type is unexpected fundamental news that can break at any time. What if a report that comes out right now that says coronavirus spreading faster than expected, and all of a sudden the markets get scared again and the yen strengthens? Yeah, could happen. So this is you want to prepare through technical analysis for fundamental news that you know and fundamental news that you can't possibly know yet, but that could occur. So you've got your risk managed. You've got flexibility in your trading plan based on entry points, based on technical analysis, right? Exact spots where you want to get in and out based on technical analysis with your preferred entry and exit points. And then also deriving direction based on fundamentals also, preferred direction. So, you know, if this was up at the resistance level, maybe you wouldn't take the market sell. You'd say, the news is good today, so I don't want to take that market sell. But because it's down near the support and the news is good today for the pound and bad for the yen, you say, I will take a market move up off the support, but maybe I won't take a market move down off the resistance. This is where you start to get into eliminating the false technical entry points, where technically speaking, you say, looks like it should drop. But you combine it with fundamentals and you say, could be a negative, a false signal here if it hits and starts to drop. Could be a false move and then boom, it breaks through potentially. Okay, you can eliminate some of those and have a better win percentage by combining the fundamental with your technical entry points. Now you might say, would you take a market move now or would you wait? Okay, certainly it was better to get in when it was closer to the support, when it was down here, right? At 141.83 instead of 8.9. That's 6 pips better. But the exact entry point that's right for you is up to you, right? If you're willing to say, okay, I have, 12 pips potential climb and I'll risk 6 pips to my stop loss, then if that's the case, then that entry point's okay. If your plan is no, 3 to 1, I want, 14 pips potential profit, and I only want to risk like 4 or 5 pips. Then you'd be waiting for it to come closer to the support before you get in. In that manner, neither one's right or wrong. It's a difference in strategy, a difference in patience, a difference in how exact you want to be with your entry points. Dell, good question. AvaTrade certainly allows scalping as much as you'd like to do. Okay, and some assets lend themselves more to being able to be scalped better than others, depending on how they move, what type of spread is on it. We're talking Bitcoin. The spreads are larger on cryptocurrencies in general in the Forex market, but they also move a huge number of points in a short period of time. Euro USD, the spread is very, very tight traditionally with most all brokers. So you could profit on small movements. And you know what? The Euro USD should move huge today with the FOMC meeting later today. So scalping works depending on timing, in terms of what asset you're trading on and what announcements, what fundamentals could be occurring as well. But in short, yes, scalping is totally okay with AvaTrade. 10 trades in 30 seconds, it's fine. Now, keep in mind this, if you're doing trades that open and close in 30 seconds, this sort of thing, there is something called arbitrage that is not allowed. If you're using a method that's known by the industry to be quote unquote cheating, meaning you're monitoring different live feeds from feed providers that brokers use, and you know that one feed is 5 seconds behind another feed, and you see at 10 brokers there's this price, and at another broker there's that price, and you're using this sort of elaborate system to take advantage of a slight delay in the market movement, and it's used repeatedly over and over and over with these small moves, and the accuracy is like 100% almost. That's considered cheating in the Forex industry. So that type of scalping, no. Okay, arbitrage, methods that are recognized by the industry as cheating, not okay. But the average scalping, getting in and out in 30 seconds, perfectly okay. Perfectly okay. Yeah, AutoChartist, Madan, AutoChartist helps you certainly with your technical analysis. It's a nice tool. It used to be a tool that cost money. We're providing it, I believe, free to all AvaTrade account holders now. It's a very useful tool, and if you were paying for it, I don't think it's so cheap. Yeah, Adele, that's fine. Buying right before an announcement, getting out right after. Just be careful because there can be slippage. There can be slippage with any asset right during a major announcement. There can be such volatility, and the market's moving so fast that you had a certain price you're trying to get in, but the market moved faster than the order could close. So when you're trading right at the time of a huge announcement, the exact entry point you wanted, you might not get it. And it's not anyone cheating anybody. It's just the amount of time it takes to process and try and match tickets. Sometimes during huge announcements, there's a little bit of slippage before the order opens. So keep that in mind as well. All right, so scalping tends to work better around major announcements, but not necessarily exactly when the announcement hits, because then the market moves so fast. Like I said, there can be slippage on the order pricing. All right, so we see that this is still trying to respect the support. It could be a move you're interested in based on the fundamentals and the technical entry point. And a logical exit point could be here if you're scalping. That's like a 10 pip move. Okay, that's a scalping type move. If you believe that it could climb all day, then maybe your take profit mark is up here. You see, this is the next major resistance level up here. Resistance, drop off. Resistance, drop off. If you think this could carry through the day, and it certainly could, then you're looking at more like 25, 30 pip potential profit. Now taking a market move with your stop loss only 6 or 7 pips down, that's a nice ratio. 25 pip potential profit to 6 pip risk. And we see, look at that responding while we're talking. Why is that responding like that? Why was that predictable? Support level, technical analysis, which is the point of this webinar, combined with fundamental news. And you'd already be in the money by, I don't know, 3 or 4 pips. And maybe more now as it's pushing up. Okay, so this type of thing is very predictable. It didn't give us the false moves that hit your stop loss before climbing. Why? Because the fundamental news is on your side here. All right, great. So someone's asking gasoline, heating oil. Let's do it. Okay, I'm open to that. So we'll look at the indices as well. So let's look at gasoline, heating oil, those sorts of assets. And maybe I passed it up. Let me find it. There's crude oil. We'll find it. There it is. Okay. Gasoline. All right. So gasoline's up through this week so far. If we look at oil, up. And if we look at heating oil, up. Okay. So why would this be the case? Especially with what we see happening with the indices. You know, indices are climbing in response to positive economic momentum, right? Well, that gives extra momentum to commodities that are consumption related as well. So, you know, when economies are doing well, when the indices are going to new highs like they've been doing, that means positive economic momentum, and people assume, well, that's going to increase demand for oil and gasoline because economies will be doing better. People will be doing more things, buying more things, and creating more demand for these types of fuels. Okay, so and OPEC has talked about cutting production and this sort of thing, which is affecting things as well, maybe artificially boosting prices with some of this. So it looks like the rise has slowed. I see consolidation on all of these, and it doesn't matter which one we look at, they all look the same. Gasoline, heating oil, crude oil, they look like almost the same image, especially the gasoline and heating oil. So as we look at this, I see resistance formed, resistance, 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 okay? And then let's look at the bigger picture, 1 hour candles. Look at that. I didn't even look at the 1 hour candles. I drew the resistance based on the small candles, and look over here. That's the old support level. You see how technical analysis can work without fundamentals even? Support, breakthrough candle. If you had a sell stop below that support, look at the win that you'd have had, okay? And then this rises back up, and magically, where does this uptrend slow and then come to a trickle and stop? Right at the old support level, which according to support and resistance theory in your technical analysis, when the support level was broke, whatever fundamental reason there was that caused the price to break below that support, if that reason still exists, then that old support now should be resistance, unless the reason that caused it to break the support reversed, okay? So now we see broken support becomes resistance, resistance, resistance. So if you were buying on, in this case, gasoline this week, you can see exactly where it would have made sense to take a short-term profit. If you're looking at shorter-term moves, scalping moves. You look at the 1 hour candles and you see the support level and the breakthrough, you know, most likely as that momentum reaches that resistance level, it will slow down and consolidate for a while. It doesn't mean it won't break it. Very well could. But it was predictable where you might take profit if you wanted to be a short in and out, okay, before it maybe pulls back. Now, the question is, what do we do next? Listen, there's positive momentum on the market right now. What kind of pending order might you prepare in case this momentum keeps pushing heating oil? This positive green momentum on the markets, what might that do to this resistance level? And what kind of pending order would get you in? Yeah, buy stop. Good, Dave. So I might prepare a buy stop up here. Why? Because it might break. Am I trying to guess the market and say it for sure it's going to break and I'm going to put everything on this buy stop? No. I'm waiting for confirmation, number one, with the technical analysis. That's the whole point of a buy stop. Of course, you'd rather buy now rather than the higher point. But the value of the buy stop, the value of buying from a higher point is you're sacrificing some of the move up for confirmation that indeed it broke the resistance and now there's an uptrend. Okay, so entry point somewhere up here through the resistance far enough that it's not a false signal, right? It's not a quick spike and then it drops. Sometimes that happens and you say, I just wasted the distance to my stop loss down here and gave it away. It was a false spike. So don't put your stop loss necessarily right above the support, right above the resistance, maybe somewhere up a little higher. Sacrifice some of that profit for more certainty that indeed it's an uptrend, that it's a real breakthrough, like this breakthrough here. You know, on this breakthrough, would you have to have your stop loss really close? The old breakthrough coming down? No, you could have had it down here a ways, and the movement kept going. If it's real momentum, likely it'll keep going a nice distance like it did here on the way down. So if the same sort of momentum that you saw that took it to break the support is needed to break the resistance, then you might see the same sort of rise as you did fall when the support level was broken. So if it took huge momentum to break the support, it very well takes huge momentum to break back above the resistance. If that type of momentum created this much movement down, then that much momentum could have the potential to create that much movement up. And listen, heating oil, some of these assets, gasoline, have been dropping more than anyone expected, especially through the winter with heating oil. So if you get an opportunity where there's positive momentum now and it breaks a major resistance level, why not take a shot with a buy stop? Okay. Let me pause. Any questions at this point? Okay, if I see any questions pop up, I'm happy to answer them. What could we put? Let's say this breaks up and hits your buy stop. What then, after that trade's open, what could I put down here? What do we call it if I put a sell stop down here for the same trade size? In case it reverses, and maybe you don't put a stop loss on the buy stop if you believe if this is a bigger picture move. Yeah, it's called a hedge. You could put a hedge trade down here after the buy stop opens, let's say. You could have a sell stop back below the support then, in case it reverses back down to cover yourself. And then the stop loss could be on the sell stop down here. In case it goes back up, it closes the sell and your buy is still open. If this is a longer term move, which I know, Adele, you're into. If it's a longer term move, rather than a stop loss, you might put a hedge. So you can be patient if it goes the wrong way. And then if it comes back up, it closes your hedge and your initial position didn't have a stop loss, so it stayed open. The hedge closes if it comes back up and you're still in. Okay, so that's a possibility. Kamar, you're saying my cursor is not moving. Let me know. I'm going to switch screens, and I want to know maybe something froze up. Adele, okay, you're in the money on gasoline. Nice. All right, tell me, are you seeing investing.com now? Type yes or no. Yes? Okay, so nothing's frozen. Someone was saying it must be on your side if it's frozen on your screen. Okay? All right, back to the chart. So now I've been alluding to the fact there's upward momentum. You can prepare a buy stop. If you trust this resistance, you can also sell right now, right? It's not much of a risk to put your stop loss above the resistance right now. So if you think this might reverse back down, great. I personally, I like to go with the wind of the day, which in this case is upward momentum. So I personally, I don't like to trade against the grain, so to speak, against the fundamental news. So I'm not banking on a strong reversal, but if you feel like taking a shot at that, you certainly could, and put your stop loss above the resistance. But as we watch this, it's looking like it's going to break the resistance while I'm talking. Okay, it's predictably not doing a rapid reversal off the resistance. Why did it not do a rapid reversal off the resistance? Why is it at least testing it and testing it? Because of the momentum. So now we're avoiding a false signal. When it hit here and started to drop off the resistance, you might have said, ooh, it's starting a downtrend, sell. Why is that maybe a false signal? Maybe predictable that it might not go plunging down? Fundamental news, right? So combining technicals with your fundamentals can maybe improve the situation where you have less trades that you get into from false reversals, and maybe you're waiting for the true breakthrough, maybe in this case, right? And it doesn't mean we're going to be right in this one instance, but if you use this logic over 10, 20, 50 trades, you'll likely see that your win percentage has improved by combining the power of both types of analysis, fundamental and technical. Okay, let's look at some indices. First, let's look at gold. I can't avoid looking at gold, I must. Okay, so as we look at gold, and these are 1 hour candles, we see for the past 1, 2, 3, 4, 5, 6 hours, it's come up after dropping. Okay, so gold pulled down. There's a new resistance level. There was downward momentum, a correction after the coronavirus scare and everything. Gold has come down predictably. And then it went back up. Now, since there's positive momentum on the markets right now, yeah, we'll do the S&P 500, Adele, no trouble at all. There's positive momentum on the markets. The volatility index is dropping. Let's take a look. Volatility index, it dropped even more. It's down 5%. Okay, the fear index is down. What direction do you prefer to trade on gold? Fear is down. Markets are green. Do you like the entry point at the resistance level to sell on gold? Is there a reason for gold to drop? Okay, many of you are saying short gold, and I'm not telling you that, right? The fundamental news and the technical entry point maybe is telling you that. So you don't have to risk much right now to short gold. All right, it predictably is reversing off the resistance point right here. There's the resistance. All right, so if you short gold, you could have a stop loss somewhere above the resistance up here. Huge potential to drop if it takes back where it was earlier today and goes back down here. Okay, risk doesn't have to be much. Okay, if you're right 1 out of 3 times on this type of setup, you can profit. This is scalping. This is a scalping move to try and get the movement while you understand the news that's happening right now. Okay, so that's an option. What could we back this up with in case the news changes? In case some breaking story comes out that creates a bunch of fear? What do we back this up with potentially? A hedge. A hedge if you like to sell long term. If your sell position right now, say you take a market sell for, I don't know, half a lot. If that's a long-term move in your projection, then up here, you might put a buy stop as a hedge, meaning the hedge has the stop loss and your sell position does not. That way, if it goes up and goes the wrong way, you're covered. You could take profit on the buy position at the next resistance level, and your sell is still open. No stop loss because you're in it for the long term. Covering yourself with the hedges, and then you'd have a second hedge prepared up here, another buy stop after you take the first profit on the first hedge position. Then if it drops even halfway, you're in overall profit, even if your sell is in the negative. If it breaks through, you're covered again with the next buy stop. This is a situation where you're putting stop losses on the hedge position because you believe in the market sell. If that was the case, you would hedge it. If this is a scalp move and you're just saying, I believe in a sell for the next 5 hours, but that's it, then putting a hedge trade up here maybe makes less sense. And maybe it makes more sense to just put a stop loss if it's a scalp, because you're going on a quick movement right now. It's not a long-term projection. Might not make sense to hedge. In that case, you'd use a stop loss. So hedging for sure you could do, but stop loss also can make sense. It depends on your strategy and your patience with the move. Good point though, Adele, with certainly you could put a buy stop as a hedge, or you could put a stop loss up here on the sell and have a buy stop as just a short-term move also. So if you're thinking short-term, your sell could have a stop loss up above. If it's wrong and it hits the buy stop, your buy stop could have a stop loss below with a take profit maybe up here. Gold certainly could go flying back up today. We've seen what gold's been doing. So me personally right now today, I like the scalping moves on gold. I like the potential for it to pull back down with the current news. I like the potential with any breaking news that could change the momentum, the potential for gold to climb all the way up here, even today, all the way back up into the 1586, 87 range. Could certainly happen either way. So you have both opportunities here to scalp, short-term setup with stop losses maybe, and also the potential long-term view in one direction or another with a hedge backing it up. Okay, any questions at this point? I know we're covering quite a bit. We're talking about hedging. Some might be confused. Any questions at this point? Okay, I'll keep an eye out for any questions as we go. Looks like gold's trying to test the resistance. Now you see the gap here was from a couple days back. So if it enters this gap, like this range up here, it very well could then go running up to fill the gap. So that buy stop up here, if it breaks and hits that gap, it could go running up to fill that old gap from last Friday to Monday. Keep an eye on that. Very, very well could happen with a big run. If it breaks the resistance, hits your buy stop, it could have a lot of momentum at that point. Great technical setup here with an old gap, trying to break the resistance to enter that old gap, something that could interest you. All right, so let's look at the S&P 500 then on special request. Okay, so we see the gap down from Friday to Monday. Okay, that was with the coronavirus fear, with when gold went flying up. S&P 500 gap down and continued down. Remember, we talked about technical strategy. If you have a gap in the market from Friday to Monday, it gapped down. If it doesn't start to refill the gap and starts to downtrend, typically it continues to run. That was an easy move here with that large gap. Once it downtrended, instead of going back, boom, go with the momentum. That was a nice payout on Monday. Okay, you see the S&P 500 filled the gap, just like gold is trying to do right now, by the way. S&P 500 filled the gap. Here was the gap from Friday to Monday. Once it entered the gap, look how fast it ran. This is a breakthrough candle. That gap is a resistance point. That's a resistance point, that gap level. It broke the resistance, just like gold's trying to do right now, and ran through the gap, just like we were talking about that gold could do. Now it filled the gap. So a technical trader would say, I don't care about all that fundamental positive news that we just looked at. It filled the gap. That's a resistance point. You could take a shot that if gold is breaking into its gap and might run up, it makes sense. This could pull back down. So technically speaking, and based on the old gap, this looks like a great sell. a great entry point for a sell on the S&P 500, and I'm talking short-term scalping, that today, in the next 4 or 5 hours, this could come back down to this support level down here, to the bottom of the gap area down here. All right, we see it responding right now. So if we see this dropping, I bet gold is still breaking into its gap on the way up, as this is refilling the gap on the way down. It makes sense. We're getting confirmatory movement. Gold breaking into its gap, S&P 500 trying to go back down after already filling its gap. It makes sense that gold would go up and S&P 500 would go down. The technicals are showing us that right now. Okay? Doesn't mean it has to keep happening, but boy, this can improve your win percentage. It looks like a predictable movement right now with a great entry, technically speaking. So take a look at gold breaking through. Take a look at S&P 500 reversing. Make your moves that make sense. You don't have to have much risk to the upside of this resistance to have a large potential profit here. The technical analysis is perfect, actually, on it. A lot of times when we look at the fundamental news, it's what already happened, right? Looks like some reversals are happening. If you didn't catch the ride up, the technicals look like nice entry points. Okay, I think this is a good place to stop. We've been going almost an hour. Any questions before we end? Madan, no, I don't have AutoChartist on my demo account here. I can't go through that right now. Be in touch with your account managers. It can help you with that. Maybe in another webinar, I'll have it loaded and be able to use it. Thank you, everybody, for the compliments and also the input. It's really appreciated, the good questions and the good points that people make, because I don't think of everything, that's for sure. And then as I share that with others, it's helpful for them. So thank you for the communication and participation. Until next week, good luck with your trading. I'll be back Monday evening, 6 p.m. GMT time. For those of you that are in the right time zones for that. Keep in mind, all of these are recorded as well and on the YouTube channel. So if you can't catch Mondays, 6 p.m. GMT time, if you're in Australia or something, then you can catch it the next day as a recording. Okay, bye everybody. Thank you.